Hey guys, this is Elliot Wave Sage. I want to go ahead and do a quick market update. Like always, none of this is financial advice. Always do what's best for you. Just use this for education and entertainment purposes only. I'll have one market update and have a lot of travel coming up again. So probably won't be back online for a little bit toward the end of the week coming up. But right now, I like to get this market update out and just show you where I think the market is. So going into last week, starting the week, we expected this bounce, which played out. We didn't really know the significance of it, but it is obviously either a new connector wave for lower prices, which actually would become too low, like for the degree of correction is labeled. And in fact, if you really look here, if you look at this leg, this correction is really, if this was 4 against this 2, we would have expected it maybe here, but now it went a little deeper. So we have to keep it, we have to understand that this 5 may actually continue to go higher in what could take place. And what could take place is that this was a 1, 2, and we continue higher with our blow off top, and we blow through these targets. So because of that, I don't like targeting any short entries at this 620 level anymore. I believe there's a risk for more upside and this kind of blow off top in wave 3. We've seen that before in the market with the last wave 3, if I remember right. Going back here, this was a kind of a wave 3. You see essentially vertical. We may be set up for something like that coming soon. Now, so with the data today, I like to relabel the graph this way for now. And this is just the way we want to label it. As you can see, we really corrected this whole cycle. This really isn't any kind of fifth wave with no divergence. We correct it. The RSI is above this pivot, so we're not correcting this cycle. We're only correcting this leg with this decline, and clearly the correction is over. We have to respect the fact that this could come up and take out this peak for the wave 3 of 3. So I don't recommend shorting this. And so the idea now is to buy the pullback on this impulse out of the bottom, which could still be like a 1, 2, 3, 4, 5, and we pull back to 584 in the next week or so. I would actually like long opportunities if this takes place out. If we don't get that, then it's a 1-2, 1-2 setup, and the market will accelerate higher next week. And I think people trying to get cute to short it at 620 are going to get surprised that it won't. They'll fail. So don't. I think that short setup is dead now. So this is what I'm looking at. Now, what would negate this view is if we did pull back and we took this low out here. If we did that, again, it could be just a deeper wave 2. Or then we need to start talking about, is this wave 3 in? Is it in? But for right now, there's no evidence to show that. For that wave 3 to be in, we really need to start, we need to take this out, and they need to pull back down. And we need to break this low, and then we could start talking this is in, and we'll get a much deeper pullback here. There is some evidence to show that that could happen, so that's why I don't like to chase this action here. I would rather buy a pullback against this pivot, and then, or if the pivot breaks, then look for shorting opportunities later. So that's what I'm thinking right now with the market. So I believe the market will continue higher. We should pull back and retrace some of this and come out. Something like that is what I'm looking for in the market, and then a spectacular crash here. Spectacular. And it could go, I think the bottom on 4 is 480. This is probably the lowest I can think it could go, which is the breakout of this, what you want to call it, little cup and handle, like a back test, which we never back test it. Usually the market loves to back test these, and we never did, so maybe this will be the back test of that coming later. It could also make you maybe just get to like 518. So this year, we've got major selling ahead. But right now, the market wants to go higher. And that's no surprise because I showed you the weekly stochastic showed that. The weekly stochastic has shown that we want to go higher. Let me go back and put in our stochastic RSI real quick. Let's see if I can get it up here. There it is. Okay. We're just crossing over. You see that? Okay, you guys see that here? That the market is in a new weekly cycle higher. That is a wave 3 of 3, guys. That is not that's what's coming. Now when the weekly stochastic is up in this area, maybe there's some bearish divergence. We can get more bearish. But right now, that's not the case. Now, what's also interesting is if we look at the monthly stochastic, it shows the bear market is coming, right? Look. It's already wide open. So we could be making a higher high with a wide open monthly stochastic. So that's a huge warning sign at this peak. If we get to this peak and the monthly is wide open and the weekly has reset, which it should do, the market's set up for a crash. And in fact, that's what happened in the Great Depression. If you look at the crash in 1929, if you look what happened. Let's go back in history. And how did that bubble, how did that burst, right? Now again, I'm expecting a big decline, not a 90% decline or like we had something like here, but we're going to get a decline from the 600s, somewhere in there, mid 600s maybe, down to potentially 480. That's a big decline. So we haven't had something like that since this. So what happened? What happened in Great Depression? Well, let's look at the month. Let's look really closely at this final phase. Okay, let's go to the weekly RSI. I have to go back. Sorry about that. Let's go back. Go back in time. And here we are. We're traders, and we're bullish, and we're here. I believe the market is either somewhere here. We could maybe we do get full and make a new high and dip back down like this, like in a 1-2, or we're here, and we're going to get this. That's where I think. That's what's missing in this setup. And then this is wave 4 that I show to maybe 480. This is what I think we'll see. Now, I don't think we'll get this continuation like we saw. I think this will rally to new highs. Then we'll get something just almost similar fractal. Now, back here, what happened? Well, look, when we were trading, and let's get rid of this for now. Let's just look at our stochastics. If we were trading the Great Depression blow off top, right here, the weekly RSI was overbought, right? Look, overbought, right? We were overbought. We weren't down here, right? We weren't down there, right? We were overbought. Now, there was bearish divergence, right? There was bearish divergence. Look. Now, the peak was right here. So there's a little bit of bearish divergence there. That something was about to happen that wasn't good. Now, look at the weekly stochastic here. Here and here. Great Depression, and then look here, Let me line it up better. Move this over somewhere like that. There. So you could see this is kind of where we are in the market right now. We're like maybe here or here. I think we're more like here. So I think this is where we are. This is where we are. Okay? So what happened from here? This was in June 29. The market was at 305 Dow Jones points. Dow Jones points. 305, okay? 305. We rallied from June to September to 385. 385. So that's 80 points. So we gained 26% in a period of how many months? Look, May, end of May, so June, July, August, and then that's the beginning of September. In 3 months, the market gained 26% in 3 months from this low. So where are we today? SPY 597, the low, the lowest I think around 580, 579 or something like that. So if we do the math, this is the simple math here. That actually gets us to over 700 SPY, over 700 in 3 months. That is a blow off top, guys. That set up the conditions for this crash. We don't have it yet, but I think that's coming. That's coming. That's coming. That's what we're looking for, those conditions. Now, this was a crash that set us up for almost 90%, you know, a massive meltdown, Great Depression. So we probably won't get that kind of melt up, but we'll get a melt up, right? We have to get a drop as significant as we need to. We'll get a melt up. I think 25% in 3 months or something like that is not but maybe we get 15% in 3 months, you know, something like that. But whatever we're going to get, it's going to be something similar. Now let's go back to our stochastic. So that's the weekly, and we're like, cool. What was the monthly? What did the monthly look like back then if you were trading and you had this screen in front of you? Okay, let's go back to the monthly and look. Let's take a look. Look at this, guys. Look at this monthly stochastic. And I'm going to try to draw it. It was wide open to the downside as we made that 25% increase. Look, the market rallied 25%. Look at the monthly stochastic. It actually went down. Look at this. Think about the massive hidden bearish divergence in the market if you had this one indicator in front of you. Look. 25% in 3 months, and the monthly stochastic didn't even do this, didn't even do that. It actually was going down. That is what we're looking for. That is our clue to know the crash is coming. Well, guess what, guys? The monthly stochastic is wide open right now. We're like here in the monthly stochastic. So where are we? Where is that? Oh, it's right there. Look. Again, that's where we are. We're right there. The monthly stochastic right now is wide open to the downside. In fact, it's more down here. And that lines us up perfect for here. So think about it. We reset the weekly stochastic. We get a big surge higher. But if we watch the monthly stochastic actually go down, then we know what's coming next. Black Monday. Our version of it. If this doesn't happen and the monthly crosses back over, goes sideways, well then I don't see the crash setup like we saw, and the analogy to 1929 is not accurate. So that's something you want to think about, process that information how you want to, but that's why we need to go back and look at this and understand where we are and why I still think we have more upside before we get this, which I believe will be a crash. This will be a crash. I am going to write this in here so we all know. Major flash crash alert. Alert. When we're here. Major flash crash alert. That's what's going to happen. But what I don't think will happen is the 1929 follow through, right? Because we should bounce here. We bounce, right? We bounce and everybody's happy. Bounce and we're happy. But if it's the Great Depression, we melt down just like I showed you into the abyss. If it's not, you have my chart here. And this chart just makes another high and basically is analogy or this is an analog for the same situation. And then this may get us the 25% or probably higher since it's a higher degree. Maybe it's 30-35% in a short period of time, same situation. But instead of looking at the weekly and monthly, we'll look at the monthly and quarterly stochastic and look for the same kind of divergence at this peak. And then we have, like I call, oh shit. Oh shit. And then this times perfectly with Trump leaving, and he's holding up the house of cards, right? Doing his thing, but then he leaves, and whoever replaces him just can't live up to the euphoria and expectations in the market, the love of the market like he does, or the debt bubble is just the time's up and it's got to be addressed. And he's able to kick the can down the road enough so the next person has to deal with that nightmare. But this is where I think we are going in 2025, something like this now. Again, it's just my idea. It could be negated. But this low now is very important right here. This low is very important now, right there. Because if that low breaks, then of course, what we're saying is the 3 is in now. And it changes things. It changes things completely because then if that 3 is in, then you have a shot at not just 4, but you have a shot at the whole thing being over as well. And this was an ended diagonal, which I don't have labeled, that some people think. And it's still, the diagonal theory is still possible, but we need to take this out violently. And we would not, if we take this high out, that will negate the ending diagonal look. I believe that's coming because of the weekly stochastic just it may not allow an acceleration lower anymore. It's too oversold. It's too late. The bears used up their firepower and now they need to reload, and it's going to take time to let the market melt back up and reload that. And that stochastic needs to get up, back up. The weekly stochastic has to get back up here before we have better short setups, which I believe that will take the market beyond 620 in this situation that I have here. This is what I'm looking for. All right, guys, that's the market update. I just want to get this out there. Good luck trading. I'm going to do a live stream later, and we'll get into all the different other stocks. But this is the gist of what I think will be coming and what to expect. So going into the week, could get this pullback in wave 2, buy an opportunity against this low to play for this rapid rise in the market, or the market will test and the bears will take this out, and then our more bearish scenarios come into play. And then if we take this low out, then any rally could be shorted at that point, I believe, against this high at 599, and then we'll change the charts, we'll change the data. But right now, the data for me is not supported more downside. The market hit our target to the penny. Look, guys, almost to the penny. Look, to the penny. And bounced vertical. So that's a sign to me that we're on the right path here. We're on the right path here, and now we just kind of have to see what this turns out to. Again, this was a 4 and a 5, but I don't think so. I think it's too long, too deep. It corrected this whole cycle. So if we take this peak out, it's probably going to turn into a 3 of 3. and accelerate even more than people expect. That's why I think shorting at 620 would not be advisable anymore. Thanks, guys. Bye.